Okay, so hello everyone, and welcome to our financial services webinar looking at the long game of operational resilience. And I'm going to pass you over to our presenters today to introduce themselves and take the webinar away. I do want everyone to utilize the Q&A section, so do ask questions and we'll answer them at the end. So thank you.
Hi, I'm James Taylor. I'm the practice lead for SecOps and GRC, risk management and compliance. And so I've had over 20 years experience in the information security industry. I'm here to talk to you about the financial services sector, specifically around operational resilience and how the challenges around that from an industry perspective, as well as some implementation insights as well.
Hi, everyone. Angie Campos here. I'm the head of the financial services industry for the commercial U.S. market for ServiceNow. I've been in financial services my whole career, about 15 years, spent 10 years in management consulting, driving large-scale transformations, then entered the software industry at MuleSoft as the global head of financial services solutions for 2 years, and now I've been at ServiceNow for a couple of years, really spending the majority of my time here building the business unit and the go-to-market motions, and now this year is focused on all customers and engagement and helping them set up for success by driving the right resources to drive the successful transformations that align to their business objectives.
So going through our agenda here today, I'm going to spend the first part of the presentation talking about the financial services sector and operational resilience as that applies to it. And then Angie's going to be talking about becoming a digitally unbreakable financial institution with ServiceNow, the platform itself. And then I'll finish off with some implementation methodology from a Crossfuze perspective. So talking about some challenges in the financial service industry, you have an increasingly complex and interconnected environment, and those provisions of those services are local as well as international. It's also common for firms to rely upon international outsourced service providers supporting those operations. And financial service firms have experienced challenges from various disruptive events, including those technology failures, cyber security incidents, COVID-19 pandemic, the natural disasters, as well as geopolitical issues as well. To give you a few examples, I'm not just picking on people here, these are just some large-scale ones. Experian had a data leak in Brazil in January 2021, exposed the personal data of more than 220 million citizens, which was likely due to internal processes. There was a review of technical and organizational measures to adopt and implement in its data protection policy. Experian also had 24 million customers exposed through a threat actor convincing a staff member of the Experian South African office to relinquish that sensitive internal data. And just to give a bit of balance, competitor Equifax had a data breach in 2017 where private records of 147.9 million Americans, along with 15.2 million British citizens and 19,000 Canadian citizens, were compromised. I mean, if you look at those examples alone, you can see that the threat actors are both nefarious actors which are preying on people's ignorance sometimes, as well as technical and organizational failures where there needs to be change. Another example, Capital One in 2019, a former Amazon Web Services software engineer illegally accessed one of the AWS servers storing Capital One's data and stole 100 million credit card applications. So that again is that insider threat or former insider threat to that organization. You then have natural disasters. And according to the insurer Aon, natural disasters in 2021 caused economic losses of $283 billion, which unfortunately only 38% of those were covered by insurance. And last but not least, the geopolitical situation in Russia and Ukraine war, that in the financial sector has impact to investments, the financial ratings, the transactions themselves, including those sanctions. So it's a pretty rough time all over in the financial sector. And it needs that adapted approach. And talking about that adapted approach, I would say that not only has legislation and regulation changed, but it's being driven by the environments in which financial services operate, as well as making those changes. As stated here on the slide, it's recognizing that not all potential hazards can be prevented, but having that need for that flexible and pragmatic approach to that, whether that's the FCA building operational resilience with their policy statements, PS 21.3, which came into effect in March 2022. And then you've got the EU's Digital Operation Resilience Act, DORA, which is due in mid-2022. It's, you know, that changing landscape from that legal and regulatory perspective. So looking at those principles and what the regulatory bodies are recommending, from an FCA perspective, the ability of firms and FMI's financial sector as a whole to prevent and adapt and respond and recover and learn from those operational disruptions. And the FCA goes on to say, or Megan Butler at the FCA goes on to say, that operational risk management is not infallible. In risk management, you can assume harm will occur and still be comfortable so long as you're able to stay within your agreed risk appetite. And conversely, operational resilience, it focuses on an outcome. It's a step change where we expect you to be forward-looking and making decisions today that help prevent harm tomorrow. So there's a slight derivation of difference between the two focused approaches, and I will be talking about outcome-based focus all the way through this presentation. And then the Central Bank of Ireland goes on further to say operational resilient firms are able to recover its critical or important business services from a significant unplanned disruption while minimizing impact and protecting its customers. A key point there, protecting customers and their integrity of the financial systems. The first step in becoming operationally resilient is accepting that disruptive events will occur, and these events will need to be managed effectively. And a firm needs to have forward-looking plans, having that forward-looking strategic view that can be applied across a range of potential disruptions. And a firm should proactively prepare to withstand and adapt to disruptions that will inevitably occur. And just from that, you know, but there with Basel as well, their principles for operational resilience focus on governance, operational risk management, and business continuity. And they have also derived that from previous business continuity and information communications technology principles, and built upon that further. So all areas of the financial sectors from a regulatory perspective are focusing on this area, and it needs that focus. So principles for managing that resilient life cycle. So on the left here, we've got, this is the Central Bank of Ireland, where they're talking about the 3 pillars of operational resilience. And this is cross-industry guidance on operational resilience. Identify and prepare, respond and adapt, recover and learn. And these 3 pillars support that holistic approach to management of operational resilience and related risks, and create a feedback loop that fosters the perpetual embedding of lessons learned into a firm's preparation for operational disruptions. So that's that continual service improvement, that CSI. And on the right-hand side, this is how the ServiceNow platform has interpreted that and has implemented the approach where you are anticipating identifying assets, key personnel and processes, and rank in terms of criticality to that business. This can also involve the discovery of hardware and software assets, even business impact assessments to assess that risk. And then in the prevent phase, mapping those policies into business services within a defined scope, establishing those controls to mitigate the risk, test those controls, including specific business risk scenarios, monitor those indicators and events, including periodic reporting, respond and recover, responding to those incidents and issues, including the communication to those key stakeholders that need to be involved. The scenario and communication mechanisms previously tested in the prior stage are performed here. Then restoring those services to those acceptable levels. And then you've got the adapt phase, where your CSI stage, where operationally you're looking at that quality and assessing it and improving it, reviewing the issues and indicators and identifying any common themes and establishing root cause, to then get that feedback loop in to improve the operational and oversight controls in terms of their maturity, and in worst case, the control ineffectiveness and addressing that. So that resilient outcome, what is it that that we need to focus on? That the operations, that maintenance, that management and maturity. Information security and risk management aren't necessarily complex, but they can be quite broad, and there's a lot of moving parts. The scoping and priority are key considerations here. Examples of challenging areas would be in financial service operations, the information IT assets themselves, the business systems, the structured and unstructured information, the records themselves, the transactional data, how services, those SaaS solutions, the online banking, portfolio management, wealth management, as well as the back-end payment processing and secure communications between business to business or even business to customer, and those transactions as well. The standards and the regulation have a part to play there. So that, you know, if you look at the payment card industry, the PCI DSS regulatory standards of operation, the credit and debit card networks, the merchant acquirer environments, the regulatory input and oversight of those operations and records. If you think of, you know, I'll give you examples, the FCA, the US Securities and Exchange Commission, cyber resiliency, and then from, most importantly, the customer and banking agreements, that fair treatment of the customer and fair processing as well. Those processing requirements, including data privacy requirements. Having that, as it says here, the outcome-based approach, meeting that challenge. And what does that look like, the success look like? What do you need to be successful to rise to that challenge? What do I need to know as an organization? How do you categorize your organization in terms of your particular risks, those issues, operational challenges? How do you measure them from an indicator perspective? But you know, do you have the right referential data to be able to have a review of your organization, to understand that organization, having the right lens view? Everybody's in an organization has a different perspective on what the organization looks like and how it operates, that interdependency. Being able to apply your policies and procedures to those organizational parts so you get compliance, but also apply those controls to manage the risk to within those acceptable tolerances, that residual risk, managing that risk effectively. And the system of record. Having that user-centric approach, and I mean user-centric in terms of, yes, focus on the customer is where the focus is, but also in terms of the operators to manage the environments, to manage those workflows and decisions, enabling that concise and effective analysis and decision-making, having a centralized and correlated and aggregated records and event management with communication and interaction, that business logic and decision and workflow. And that's, you know, the GRC application in ServiceNow performs that. It's the underlying workhorse there. And the resilient service. So how do you provide that service with a platform like ServiceNow? How do you provide that service to your customers to measure, manage, and govern, as well as effectively and efficiently map that workflow and operations? With the measurement, having the right metrics to meet the challenge, and achieve that resilient business operation. Having those operational identifiers, those indicators that tell you whether the risk profile has changed, which you can then act upon and make a risk decision. If you've got a breach or if you've got a system that's down, you need to react quickly. So as an example, a security operations perspective, it might be that you have a denial of service, or you've got your ATMs aren't working, or that you've even run out of cash. How do you measure and define that and trigger those events so that you can react appropriately and in a timely manner? And that should segue into the next section.
Yeah, thank you, James. Thank you for that setup and really talking about the drivers of resilience and why it's so critical for really thriving in today's not only digital world, but constantly changing world. What now I will kind of transition into is kind of ServiceNow's point of view on how to make that practice a systematic practice through technology. And the role of a platform of really uniting the entire operating model to drive that in unison and really mature that maturity of operational resilience. And while operational resilience, capital OR, is kind of a concept regulatory theme driven largely in Europe, it's really an ongoing practice, really, that becomes a lifeline of organizations today, especially in financial services. So I'll talk to you a little bit about how what that perspective is of ServiceNow and the investments that we've made to really make that a reality and really accelerate the maturity of operational resilience. But before I do that, I want to kind of start with what we're grappling with, and this is not. This is very common globally across all financial institutions. The challenge you have here is, most financial institutions operate in the kind of 3-line of defense model. But when you look at the operating model and how that's infused into it, the problem is it's really not infused. This slide here is a view of the disparate nature and siloed nature of really how financial organizations operate overall. And then you tack on technology on top of that, and it's even more fragmented, because what you have here at the bottom layer are kind of the systems of record that house data around your business, around various parts of your business. But in order for work to get done, additional tools are used on top of that to get data from one system of record to another to really get the work to flow. On top of that, if you layer on risk management activities and tools, that in itself is disparate too. And there's so many activities across the board and to manage that enterprise risk management lifecycle to even be able to drive resilience. But even the data and the types of risks are so vast. There isn't a single place to really unite all that and apply a common practice for managing risk really in an enhanced manner across the board. And then on top of that are the organizational silos, the people. I touched on technology, data, process, and now with people, everybody has their different views of what risk is, the compliance posture, let alone the operational resilience of the organization. And so that fragmentation is really the challenge that ServiceNow aims to fix and really redefine. Because on top of all this, what our platform, the enterprise platform to run a digital business is meant to do is really unite across at that top layer, all people with a system of engagement where everybody has the same view of what needs to be done, what the risk posture is, and supporting that processes that are common and applied consistently across the entire risk management lifecycle, in addition to doing that consistently across any and all types of risk. Because we are also inherently a workflow platform, we not only do that for the enterprise risk management function, we also do that for every other function in the organization. And especially with our recent investments for out-of-box capabilities around business operation automation, we're able to connect and streamline all that across core financial services as well, and create relevant connections by leveraging the data across the various lines of businesses and the corporate functions you have there that are also fragmented but connected through our platform that is meant to integrate easily to all those systems and draw out the data, align it to a common data model, and really pull that, extract it out, and fuel workflow to get work done. And so I'll kind of give you a preview on what this looks like in terms of trying to manage resilience. I mean, the first part of resilience is understanding where your operational risk is so that you can then make an informed decision to do something to remediate that risk. A common example here, although a case study, is if I just look at it from an IT perspective, all that fragmentation is happening across the board. But even if you drill into any specific function, it's happening at every line of business and every level of the organization. So this large regional bank based in Europe was an early kind of adopter of ServiceNow and really quickly expanded across the platform to really not only automate or create a central view of all their technologies, but also drive automation around that technology management lifecycle. They understood the value of that and really started to expand that adoption and apply those principles across all their corporate functions and most recently their lines of businesses. But the starting point looked like this, and I'm talking about the risk view. What they had when it came to reporting the risk view of their IT environment, they had 3 views of that technology worlds, even within the technology function. And then if you try to connect that to the risk view of those across those technologies, there are 3 different registers for risk on how they define different ways to define risk, how they would manage those controls. I'm so sorry, I forgot to push this to the audience. There you go. Thank you, James. And that, because of the disparate nature of that, it took months to even create a view of risk, which, because it took months to aggregate, it was already delayed, historical, and probably not accurate because of the amount of time that it took and just the historical nature of it. So the way that we fundamentally change that, again, it kind of goes into that motion of technology and data and uniting that, uniting processes or operations, and then really uniting all the people. We first start with the data piece of it. The recent investments that we've made in financial services is really to expand that common data model that aligns all technologies and data that flows in the platform and fuels workflow to a common data model that is aligned to a global standard. On the left side, you have the risk that can be reflective of any customer and the types of risks that are relevant to their business. Within financial services, these are just a handful of types of risks. But even within that, there's a way to create a taxonomy and to make relevance across each other. And it's not just the risks that you can map, but it's also to the policies and the regulatory citations that are associated with them. On the other end of that are the data elements that make sense of, that create views of specific entities, products, service, whatever it is that you want to measure that risk around. And that has been expanded through the recent investments, again, like I mentioned, to now make it relevant more in a financial services environment. So once that data is connected and everyone's speaking the same language, the next part then of that evolution is connecting the workflows, the operations around it. And what that looks like here then is this slide here, where you're not only able to, the outcome of this is not only having a real-time view of what your risk posture might be through any lens, it's also around being able to really monitor the risk posture in real time. On the top part there are the kind of elements of integrated risk management that enable enterprise risk management to operate. Right on the left side, you have the mapping of all the regulations that then can fuel into the company policies that then map to corporate objectives, control objectives, and then ultimately to the controls that in the system you can also create logic, that single kind of master system of record for all your rules and logic to really identify what the control indicators and whether they're working or not. Those can be also closely correlated to the risk side of it. And this is where it really becomes a reflection of the corporate strategy within a financial services environment, right? The risk framework, the risk appetite statement, that is a reflection of not only the bare minimum compliance that you have to adhere to, but on top of that, how much risk you're willing to take for the reward. And the ability to map that risk to the specific control and define risk indicators is really game changing, and having that kind of linkage across the board within a risk management environment, let alone the ability to link those indicators to all of the other workflows that sit across, that fuel the first line of defense across any function, whether it be HR, security operations, or business operations, be it payments or loans or insurance policy, et cetera, as well as IT. And so how that has, how a concept like this has really changed the nature, and I'll go back to the example that I started with at the beginning. This large bank realized the value and really the ability to reimagine how risk can be embedded into just ongoing operations. And within this IT example, on one end, the bottom part of the previous slide was the operations, because they've leveraged the entire technology stack to create a single view of their infrastructure and their applications. They were able to then map those applications to critical business processes, which at this point hadn't been automated just yet. That was kind of the next step in the evolution. They're able to automate and streamline the impact analysis of any change in that tool. But on the other end of it, on the right side, is really the integrated risk management activities that then enable the mapping of the risks, the policies, the controls, and the indicators to specific resources that fuel the entire company. So and as they expanded the adoption of the platform to go across not just IT, but also to cyber and to HR, to property facilities and to their vendors, they realized that the value of having all of this data in the platform was able to create this linkages. So while they already had the linkage of critical business processes to technologies, they were then able to expand that view to look at all operational pillars that drive resilience. From there, they then automated the risk management activities. So rather than aggregation and reporting on a historical basis, it was around control testing. They were able to, even to the point of eliminating much of the outsourced testing that resulted in over $8 million of annual spend a year. And then start really integrating that into other operations, like within the operational risk pillars, like supply chain, and incorporating that and resilience workflows in the vendor risk management lifecycle, as you see on the right side there. So having said that, I would challenge you all in the audience to take that kind of initial example and really reimagine how that can change how the financial services model across the board. Because there's no other platform in the world that, one, was born in the first line of defense, but also unites that first line of defense with common data, a common language, and connected workflows to the second line of defense, as well as the third line of defense, with automation driving across all three of those. And with that, we're able to see, and I don't know if it'll click, you're able to consistently apply any activity across the risk management lifecycle consistently across the first, second lines of businesses in a view that is relevant to your function, to your line of business, while also being able to roll up and create aggregate views to the method and view that's most meaningful. And so take this concept and really apply that to the framework or the methodology really that James is going to bring us home with on then taking this to mature the resilience and really becoming a digitally unbreakable financial institution.
Thanks, Angie. I'll just add with a bit of a personal perspective. I've had a few years working with ServiceNow, decades working outside of it. But I must say that, like you were saying, the platform is a game changer in that it has the breadth. It does have that operational background and heritage, and every business now is an IT shop in some way or other. Mm-hmm. And the fact that this is, as an application, even in the short time, the few years I've been working with it, it has evolved and developed, and there are even more integrations where you can either pull data in or have the data in a particular table, which is easily referenceable. So you're in real time or near real time data, where you can aggregate that data, manipulate the data. You can provide customized dashboards. Even, from an out-of-the-box perspective, the new persona views that are now in the new release in San Diego are fantastic, because they're looking at the operators themselves. And I mentioned it earlier in my slides about having that centric view, user-centric view, customer-centric view. It makes a huge difference, because you're crystallizing what you need to know and making it a concise, efficient exercise. So it's how you use your data, not just the fact that you have the data.
Exactly.
And moving on to the implementation side, it's just refreshing for me. I don't know if it's come through to you.
Nope, I see it.
Okay, so just slow connection. Hopefully I can get the slide up.
It's coming up for me.
Okay. So talking about the known knowns, and this was actually a phrase from Donald Rumsfeld, who I think pinched it off someone else: the known knowns, the known unknowns, and the unknown unknowns. So having that understanding of your organization, that referential data about the assets and the organization through various business lenses and perspectives, having that objective with that detail, as well as that subjective view of the organization. So from that personal perspective as well, key points really, that it's about the data, but it's also about the perspective of the people that are using it, how they're using that data, how they interact with each other as well, and how do we improve that resilience from a measure, management, and governance for specific outcomes. Having that consolidated and distilled view, which I mentioned about those dashboards, having that communication, that RACI, where you have people know their responsibilities and it's a defined workflow, it's a defined process. Having risk and operational decision makers involved in that in a timely manner, having that establishing that monitoring, the key risk indicators, the key compliance indicators, the key performance indicators, to also consider, in my opinion, having attestations initially. You don't necessarily need to have that full-blown, I'm going to do everything, and everything's automated and I've got all my indicators. Typically, that's not day one activities. You have attestations where you trust people. They tell you, I attest that these controls work, I provide the evidence, and then you follow up later on with a validation, whether that's an indicator or you actually go and do a test, an audit of that environment or that user, and understand in more detail about what's actually going on, not just to say that you are compliant, but actually prove it with the evidence and the independent testing. And equally, then that comes back to that 3 lines of defense. You have the operator, the tester from a practitioner perspective, as well as that external audit perspective and internal audit perspective as well, checks and balances. And then onto automation. So reducing that manual task and improving those team collaborations. So where you can have those situations where you either automate or semi-automate processes, you can even integrate it within your workflows. enabling that risk and compliance oversight, having that identification, assessment, response, contain, recover, from a SecOps perspective, understanding those workflows, task assignments, authorizations, triggered actions, from a security orchestration and response. That can also be from business systems. It could be in your, sales, for example. It doesn't have to be security. So, we take telemetry from various different sources. The collaboration using Teams, OneDrive, Slack, ServiceNow mobile apps, other platform integrations. I've lost count of the integrations, and they keep coming, actually. You've got, from a security perspective, you have the vulnerabilities, intelligence, observables, compliance and risk tools. You have ongoing discovery activities, whether that's your security scanners, whether that's your ITOM update and assets of your CMDB, enriching that data. And then in terms of methodology, that need for a flexible, pragmatic and proportionate approach to operational resilience, strengthening the industry's ability to respond and recover from such events. So coming back to that statement, and the two underpinning parts of that is the operational resilience is the risk management, those groups that pinpoint the most significant risks, and from a business continuity perspective, ranking those enterprise critical enterprise activities, the interdependence between those processes and applications and functions to process relationships and third parties, even especially third parties. Don't forget third parties. The operational resilience efforts utilize this information to input into the service level view, condensing, rationalizing and clarifying that data to provide that information to enable that informed decision making and making it an outcome-based approach. So that, in summary, and there's quite a lot to go through, it's a big platform. It is my view on where you should focus.
Yeah, I really like this methodology. It draws out like step by step on that on how to execute on a concept that is so big, but also doable.
As I've got in the bottom right hand corner, test, because that's one thing that people need to do more of.
I agree.
Do we have any presentations from the floor? Any questions from the floor?
I'm not seeing any.
I don't think we have any questions at the minute. Let me just double check here.
I think given that we're going to be... Oh, go ahead.
Yeah, I just have one question. So we've got here, these are broad initiatives that affect roles across the enterprise. How do companies handle change management in order to stay on track?
It's good question. I would say that this is actually one of those prerequisites, even before you engage with ServiceNow or integrators and implementers like Crossfuze, is having that understanding of what you want to change and how you want to change it. We can even provide those consultancy services to go through those decisions and understand and work out and roadmap things. And organizational change management in itself is a subject. And I would say that preparing people for the change, and if I talked about the workflows we touched upon there, the business owners, the system owners, the service owners, getting them involved and engaged prior to even having a workflow discussion in a tool is key. You need to get those people on side to understand. And to be honest, you're probably already talking to them in an ad hoc fashion where you're asking them to fill in a spreadsheet or to tick a box, literally, where you're trying to make that step change to make their life easier, where they don't have to repetitively fill in forms. They might have to do it once a year, and it's a testing, for example, or it's actually saying, I've seen the results of these indicators, and I agree that this is the way that it's operating. So you actually get more information in the platform to validate how you operate or not. And it becomes a much richer conversation with those stakeholders. And I think once you actually break down those processes and show them to those stakeholders, they're on board generally because you're making their lives easier.
Yeah, agreed. That was a great response. I mean, I think we lay this out so easily in terms of this vision and how it could be a reality, and tactical steps, approach steps on doing that. But really, the hardest part for any transformation like this is going to be the culture. So ensuring that you are really partnering with right delivery partners or building that kind of function internally to really drive sustainable change is, I think, another discipline in and of itself, to understand what leads to sustainable change and how to communicate, to James' point, the impact for better on everyday works.
Yeah, and these are, no small changes for organizations. Even if platforms like ServiceNow, to have the risk perspective, even different risk groups involved on one platform is a game changer. It's a step change, and it does literally break down barriers in an organization and enables things to work more effectively and efficiently. If there are no other questions, I've got a bit of a summary just to help those that are listening. I'm assuming that's
we do have one more question. Yeah, so the other question we have is, which module of Snow does one needs to use for ITSM, GRC, etc.?
Well, it's been in the platform for quite some time. The latest version is San Diego, and I believe that the releases actually for GRC don't necessarily follow the releases of the platform updates. They tend to be in advance of those updates.
And the other thing too is I think to really achieve that vision of resilience that is completely automated and driven in real time risk information to fuel automated resilience workflows, that is going to require digitization across the board, with data being connected across the functions, as well as workflows, the automation to drive that resilience. So what I mean by that is, at the least for this, to accomplish this vision, it would be the digitizing and uniting really the enterprise risk management function with the integrated risk management suite, creating the single view of technologies and people and facilities and business services with those corresponding suites that would be ITX, including ITSM, ITAM, et cetera, with HR workflows, with now financial services operations, and vendors and facilities.
Okay, amazing. And that's all the questions we have today. So I'll leave it to you, James, to give us your summary.
Thank you so much.
So just some final thoughts, really. In terms of implementing these types of changes, have those prerequisites, that kickoff activity beforehand, evangelize that change, enable the business, the stakeholders prior to implementing this and the workflows and the ways of working. And to be honest, I'm going to actually be specific here. It's like when you implement a new policy, there's a campaign to ensure the company is aware, as well as acknowledging they've read it and understood that policy. And it's very much the same for change, making sure that people understand what it is that they're agreeing to. And understanding that referential data, the known knowns, and that you have a view of the organization through various lenses as well, having that referential data. And that's what the CMDB does so well. Having those records, those systems, those business units, those legal entities defined and related data there, the class system of those data. And from an implementation perspective, have a clearly defined scope, how you define your controls, where they're defined, as well as those risks, and prioritize it. Have a phased approach. Don't do big bang necessarily. Have a phase 1, phase 2, phase 3. It may be that you do compliance first, then risk, or compliance and audit. Audit tends to sit over the top, so it's a good complementary thing. You may also then want to look at vendor risk management at some point in the future. Iterative. Be iterative, have an adaptable plan, and I'll finish on test.
Love it. Thank you all.
Brilliant. That sounds really good. I don't know if we have time for one more question that's just been put into the chat, but you might want to give like a quick answer to this. So it's, how do companies get buy-in from vendors who need to adopt new operational resilience policies?
And I think there's two parts to it. There's the actual embedding of those policies into the operations. So if you have the new policies and the controls and the indicators kind of mapped or digitally kind of defined in that system of record, you can also start incorporating those controls into the actual workflows around vendor onboarding or vendor risk management, vendor lifecycle overall, so that from a vendor perspective, they're not caught off guard by a call from procurement requiring new information or changes in processes. It kind of just is already embedded into the workflow that they're run through the digital automation, the workflow platform. But again, it does go back to that change management component, right? Even though it might kind of come up naturally in the experience of that workflow platform, they could notice the change, and that will lead to conversations or cultural kind of adoption components that, again, go back to change management.
It's quite a simple question, but it can go in many different directions, and I'll try and give a concise answer. Taking aside the platform for one moment, when you're onboarding vendors, you tend to go through various checks and balances to onboard them. You go through contracts, negotiations, and the T's and C's. And typically that's the time where you'll get the agreements for various operational practices and procedures and controls. But beyond that, so managing your vendors ongoing, you then have to have that back and forth around if there are any changes to your environment, to their environment, to the regulations, and you ask questions. From a platform perspective, ServiceNow does do the contracts management and management of the vendor, which is more to do with the actual upkeep of the service. But where you're talking about risk management, vendor risk management is actually asking specific targeted questions around operational activities, whether that's information security related, whether that's to do with your privacy of data, depending on what they do. And you can have those targeted questions, and you can have a back and forth response through a portal, and you can assign people from those organizations. So the platform enables you to do that. What I would say to help you with that change is also about preparing your vendors. So if there's going to be a change, send some precursor questions out, send something out just to, even if it's basic, to then get them their buy-in. And then of course you have later on, you might have contractual changes. Sometimes it's more simple, sometimes it's more difficult, depending on the ongoing relationship between those vendors, but it's entirely possible. The benefit of the platform is that it provides the workflow. And if you've got multiple vendors, many vendors, then it gives you that overall view of your compliance and your approach, and how you want to manage that supply chain, or multiple suppliers, for example, so you have that redundancy.
Thank you so much for answering that. I think that's all the questions we have for today. So I just want to close off by saying thank you to everyone for joining us. And if there are any other questions in future, feel free to reach out to us or either of our speakers. I'm sure they'd be happy to answer any more questions you might have. So yeah, thank you, everybody.
Thank you for your time.
Thank you so much.
Bye.